Hey Scott, how's it going? Andy, Steve,
Good, good.
Good.
happy day.
Happy Monday. Hear ya. See ya. It's all good.
Perfecto. All right, so today is April 3rd. March is over and done with, and here we are in April. Fortunately, April 1st fell on a weekend, so that we don't have to endure any more New Year's, or not New Year's, but April Fool's jokes
Mm.
during the market, as we know from observing and interacting today.
Every day in the
Uh,
news is an April Fool's joke right now. Sorry, I had to
Exactly.
say that.
What's real and what's not.
It's hard to
Um,
determine.
Absolutely. So here we are, April 3rd. Welcome, everyone. Thanks for taking the time to come hear what we have to say today. We'll try to make it entertaining and profitable for you moving forward. Before we get into the good stuff, though, always have to make sure that the lawyers are happy. And just want to make sure that everybody attending today is aware of the fact that we are distributors of information. Uh, if you need investment advice, you need to seek out a registered person. If you need somebody to tell you what to do, those guys are a dime a dozen out there. It doesn't take a lot of effort to go to Google and find a licensed individual that can help you out with that type of investing. So everything that we share with you here today, strictly for educational purposes. So I think that is good enough.
Yep.
All right. Before we get into the presentation today, I always just like to take a moment to let everybody out there know, and since at least half of you out there in attendance are not current subscribers, when you do sign up for Trade Ideas, you get a world-class flagship scanner. But that scanner has been being built upon for going on 14, 15 years now. So it's getting, for lack of a better term, a little complex. So we realized this a number of years back, and we're like, well, we're going to have to create a community around this technology. And we've done a pretty good job at doing that. It all starts with Barry's Trading Room, which is hosted every day by Barry Anderson. The trading room is free. You don't even have to be a subscriber to get into the trading room. So if you haven't been doing that, whether you are a subscriber or not, probably be in your best interest to start doing that. And of course, we host 4 webinars a week, Monday through Thursday. Myself and Steve do office hours on Monday. Steve takes the helm on Tuesday for Trade of the Week, and Andy rides shotgun with him. Bring in a little bit different of a flavor for you on Wednesdays. We bring Dan Merkin and Brad Williams. Dan is the founder and CEO. Brad is the chief technical officer, so you get a little bit different of a take on the Q&A demos on Wednesday. And then Andy gets to round things out with his trading studio on Thursdays, and I always ride shotgun with him. So lots of content coming at you guys on a weekly basis. We try to keep it fresh and what's applicable to each and every day. So not just the technology that you're getting, but a very supportive community as well.
Don't forget about the one-on-ones.
You know what? How can I forget that, Steve, when we do them all the time? And when you do sign up, you're not, we don't just say, hey, thanks for the money, now you're on your own. We give everybody a one-on-one hour of power training session with either myself, Steve, or Andy. So you can sign up for that as soon as you become a subscriber. And we'll, customize that session for what it is you hope to get out of the product. Of course, that's taken right now, Steve, due to the extremely positive response that we're getting from our new signups. We're getting a lot of them. So, you can't just hop in there and get a training session the next day. Typically, the wait time is, I don't know, what's it running right now, Steve?
About around 2 weeks.
About 2 weeks. But that's plenty of time to get in there and kind of dig into the software, kind of try to find your feet on your own. That way, when you have your training session, you've got your questions all queued up and you can make the most out of the time.
But we do have a mocked video that's about 1 hour long that a lot of people like to watch maybe before the actual training session. So if you're listening and you're somebody who wouldn't mind hearing that, you can always request that at info@trade-ideas.com. It's called Getting Started, I believe.
Yeah, it might be a good idea at the end of the session. We'll just drop that into the chat.
That's true. We can
people
do that.
that want to see what it's all
Matter
about.
of fact, I'll just do it right now before we forget. I got
That's a
the meetings to
fantastic
do it. And everybody there on your GoToWebinar toolbar, you'll notice there's a little sub-menu called chat. If you click the little arrow, I'm going to go ahead and drop a YouTube link directly in there. And that was just created last Friday, so it's very up to date. We're going to be using that to really help on board a lot of the people coming in through our test drive, which we'll hear more about as well. So as we get bigger, we need to have more content available for people on the ready, and there's a good one that was just made.
Certainly. Before we get into the meat of the presentation here, as you can see, the way we normally do it, Steve's going to talk about the markets, what's happened, what might happen, things that are setting up. We'll go into the Holly recap, which is our AI, talk about how she performed today and how we can glean additional information from the information that Holly is throwing at us. And then we're going to talk about what I affectionately have termed pack leaders, right? Because when we take a look at the market today, and of course everybody was in the chair today, hey, it wasn't just a big buying bonanza, right? We had a little downside dip, makes things interesting. However, Tesla, Panera, two of the flavors of the day. Now, of course, in retrospect, we could look back at those stocks and go, oh, would have been nice to get in here, been told about the stock here. Well, we've got some pretty interesting things to show you, some very simple metrics that would have put you in the path of Tesla and Panera in plenty of time to take advantage of those moves. So onward through the fog, Steve. How about I pass the presenter role over to you, and you can tell us.
Sure. I was just answering a question there real quick.
Sure.
All right. Okay. Let me show my screen clean. And we will start where I've already got it here. Look at that, the SPY. And this is the same, there we go. This is the same trend line that we've kind of been focusing on for the last 10 days or so. This is the same trend line we talked about, how last Monday the market gapped down way down below and then shot right back up and closed above the trend line. Following day, the market used that trend line as basically the base and support and low of the day. We finished the week off and the quarter, I might add, with this little red little kind of shooting star here. And quite honestly, it looked like that was it. That was it for the dead cat bounce of last week. And so coming into today, we may have some sell pressure. And what do you know? We did have some sell pressure. And what do you know? A double what do you know? It basically popped the lows of today, once again, right off this trend line, which I will also add, you can't see here, but as I understand it, we're going to be having moving averages coming very, very soon now to our trade ideas alerts. But if we had a 50-period moving average right here, not only would you see the trend line held the low of the morning, but also the 50-day moving average. Subsequently, on the top, we've got the 20-day moving average kind of putting a cap, kind of a lid, holding the price down. So definitely another wonderful stick save by the market today, but the market's not necessarily out of the woods. I'm not going to say the SPY is out of the woods till we get a close back above this orange line here. So we're still back here kind of in no man's land in the prior range that we were in. This trend line seems to be holding more than some people probably would care to admit, just looking at the last 4 or 5 days here. So I'm honestly a little surprised. I really thought that today we would have some follow through to the downside. And so keeping an open mind as a trader, we've got to just tear that piece of page off the note and throw that in the cylinder basket and say, okay, back to having an open mind. That was quite a buying afternoon stick save once again, with the giant wick to the downside, the thing that we've been talking about all the way up this market. The buyers just seem to be the ones that have the last laugh by the time the bell rings. If we had closed with a big red bar breaking below this trend line, well, that would have been the first day we closed below the trend line, and we would be having a different conversation right now. But again, I thought maybe that was the day on Friday to start looking for some shorts. Holly had about 4 or 5 short strategies. Jamie's going to talk about some of those as well. Really nice sell-off in the morning, but my God, the powers that be that are in this market are not giving up yet. And so yet a wonderful end of day buyer saved this market from rolling back over and crossing and
BTD,
closing.
BTD, all,
Yeah.
buy the dip.
BTFD, buy the
Mhm.
effing dip all day long until you don't. And it's been that way for years on end. We may have a couple hiccups here and there with Brexit or an election or what have you. But the footprints in the sand are what's telling me, you know, again, going into Friday, I thought, hey, I might be starting to get bearish here. If this thing closed the way I thought it was going to close today, all the way on lows with a red candle, then what I thought was going to happen would have happened, but it didn't. So I've got to once again tear that out of my mind, forget that. Don't get focused on, well, I know this is a bear market coming, I'm just a day early. No, focus on the darn price action. Price action kicked the price right back into play and held the levels. So unless we get a close below the trend line, that would be bearish. And if we get a close back above this horizontal support line here, that's going to be bullish. So we'll see, how this resolves itself. The Qs continuing to be the leadership, did not pull back hardly as much at all as the other stuff did today. So they're still showing us leadership. They tried to pierce the support level, which was prior resistance. They succeeded in piercing it, but they did not close below it. So the Qs are not in no man's land. The Qs are back in control. NASDAQ had a really nice recovery. Jeez, I mean, actually maybe even put in a new high at some point today, for all I can tell here. So the Qs are continuing to be our leadership. Diamond, same thing with the diamond. They basically bounced right off their support line with the end of day buyers, but they're back here in no man's land. And then the Russell 2000, just really back and forth, nothing really going on. One could even make a case, maybe a shoulder and a head and a shoulder even starting to appear. But it appears that the Qs are where it is at, so to speak. Amazon, Tesla, all your other stuff. So the footprints in the sand are basically showing us that this is the leadership. And just one more time, what I'll be watching going forward this week is how this trend line will hold up, if at all, if it's even tested again. And if we can get a closing price back above this 267.70, well, then the bulls are back in charge. So, one day and even this morning for a couple hours, I was thinking, hey, this could be it. This is probably going to be the turn, but we have to have an open mind and we have to look at the end of day prices before we start counting our chickens. And end of day prices basically prove me wrong. Got to have an open mind. Buyers are still in control, at least in terms of today. So that's all I've got for you, Mr. Jamie. I'll send it back to you.
Thank you very much.
All right.
Okay, good stuff. Good stuff, Steve. Yeah, will the trend line hold? And based on what we saw today, those sellers just could not maintain control. And hey, believe me, as I saw the market unfolding this morning, I know you're of the mindset you never like to call things, but I was like, Steve was right on that tweet from before the weekend. It's a down day.
I was right. It's
and
still a down
right.
day.
You were right. There
right.
was plenty of downside action to be had today.
I just wasn't as right as I wanted to be. I thought that we really could have a weaker day today. So I'm surprised. I am surprised. But I did go out on a limb on Friday. Usually I don't make those kind of things. But what I was seeing on Friday, I thought I'd go ahead and timestamp that. So yeah, we're down on the day, but geez, not much. We could be right back up on the open tomorrow. We'll see.
Yes, we will. We will. Okay, let's get on into what Holly did today. So let me get rid of this little guy real quick. I am traveling on a laptop, but I think everything is nice and legible. So here we go. Where's my Holly strategy panel? There we go. Bear with me 1 second. All right, so Miss Holly came to the party today with quite a packed deck. So we can see all of the trades, all the strategies that actually took trades up here, even though these guys showed up. It was a non-event because those very specific parameters were never met. But on the strategy side, we had 4 shorts and 9 longs, total of 13 strategies. And let's see here, we have 1, 2, 3, 4, 5, 6, 7 of those did not fire a single trade. And on the trade count in general, 16 trades. And of course, 6 of those were short and 10 were long. Now, for those of you who watch on a daily basis and are the premium subscribers and watch Holly, what was a little bit different about today? We've had bigger strategy sets, 15, 16, but it's the number of short strategies that are starting to show up. And then, of course, today, 2 of these guys didn't fire, but we did have a nice bit of action, 6 total trades to the short side today. And although they didn't just crush it, for example, this guy right here on the risk off side was the leader on some of these short sells that we had today. So now that we're seeing short plays come into the equation, and in the past they might have just been flat or up a little bit, they haven't really been doing anything. So what does it mean that we're starting to see a few short plays actually make some decent profits? Well, could just be a little vacillation period before we go back up, or it could be the beginning of a new trend. And of course we don't know that. We just have to see what happens moving forward. But when we start to see things show up that haven't been there, well, it's interesting to say the least. Now, Steve can attest, back in the old days when we were trading and the market was just going straight up, leading up to the 2000 period, people like us that were, we had a lot more fun short selling than going long, probably still made a lot more money short selling in those times than we did going long. But that was then, this is now. Market mechanics are much, much different, and the only edge that we can have these days is from an informational edge. So that's why Holly is so interesting and intriguing and has been very captivating and pointing us all to some very good trades on a daily basis, because what is the informational edge with Holly? Well, obviously, these aren't just randomly selected strategies that are just spitting out trades. For those of you who are new, quick summary, all of these strategies are part of what we call Holly's base. And the base of strategies is constantly fluxing somewhere between 45 or a little over 50 strategies. These are all very large sample strategies that look very good from a statistical back test, but there are way too many trades in there for us humans to try to tackle. So Holly does her work every night after we incorporate today's information into the database, retools these strategies, changes them, optimizes them, retests them, and only the ones that meet the minimum on our proprietary scoring system are the ones that make the cut for the next session.
Can I add a little nuance to that? Because there might be some people out there who understand the difference between what in-sample data and out-of-sample data is. And it's kind of a cool concept. And when Holly is doing the back testing and then rejiggering and refiltering and rerunning and then refiltering and rerunning, and then finally saying, okay, I think this is the setting for tomorrow on this particular setup. Well, that was all done using, say, 70% of the back testing trades. The other 30% were held aside. I call it virgin data, but it's called out-of-sample data. And so just so you know, these final win percentage scores that come in, and this is the way machine learning and deep learning and artificial intelligence is supposed to work, is you have to take what you created using your in-sample data and using all that data to create your filters, then you have to move it over and drop it in a virgin pool of data and then see what your score is. And by doing that, that creates a clearer vision and deletes any criticism of what's called curve fitting, of, hey, you're just taking the data that you got and pulling a couple levers and dials and making it sweet because that's the way it fits perfectly. Well, taking that data and then dropping it into an out-of-sample mix that the machine has never seen before, and then we get the big score above 65% win percentage, above 3-point profit factor. Those are the final scores that we use. So I just wanted to clarify that if there's anybody out there who's next level on that type of stuff, we're not curve fitting these strategies. We're using in-sample data and out-of-sample data, and that is the correct way to do it.
Good explanation. All right, so let's get into the actual trades today. So typically what I like to do here is, number one, I like to start off by showing everybody this little price chart over here, because this is Holly's ebb and flow of either profitability or non-profitability as she starts building what we could call her daily portfolio. So we have risk on and we have risk off. Risk off, by definition, is Holly obeying all of her rule sets for each and every strategy, just like you and I do the same thing in our daily trading routine. Hey, we're getting into stock XYZ, but if we're wrong, here's our stop loss. We're going to set a profit target, and maybe we go with a timed hold as well because we've been using the odds maker to come up with a decent statistical set. For those of you who don't know what the odds maker is, that's our in-house backtester. That's also what Holly uses when she's doing her work as well, because that brings up a good point. This product was not just thought of and then all of a sudden we had Holly. It's layer upon layer. It's years and years of experience. So we first came out with the backtester, but we quickly realized, wow, this backtester allows us to power through these massive data sets, but guess what? I still have to run the backtester. I still have to make all the changes and do all the calculations and wait for the system to finish and then go, okay, this makes sense, this doesn't, let me try to redo it. Long story short, I might work for 4 hours and find something really good, or I might come up empty-handed. In the words of the oil drilling business, you hit a dry hole, right? You spent 150,000 and then you hit a dry hole. So what we realized is that, wow, we invented this machine that allows us to accelerate through one paradigm, but when that thing that we found stops working, it's back to the drawing board. So that's what led us to create what is now known as the Holly AI, because she's doing all the heavy lifting for us. She's doing the back testing. She's adding and subtracting filters and retesting to see if she hurts or improves the strategy. And that is what you're getting with this AI system here. In other words, the heavy lifting from the data perspective side, there's no way that you, me, or a team of people could ever hope to achieve it. So there is the underlying value here, and that is what's producing these statistical sets. So when we're talking about Holly, risk off is just her obeying her rules. Risk on is simply that, taking more risk and keeping the positions open longer till the end of the day or whenever you decide to get out. So you see there's a difference. You know, we've got a 92 cents on risk off. We've got a $1.80 if we're accepting more risk. So with more risk comes more reward to the tune of about 2x today, a little over 2x, 92 cents versus a $1.80. Now, people get confused and they're like, well, I don't know what to use. Should I use risk on? Should I use risk off? Well, you don't have to pick these things in advance. We can address them from a trade by trade basis. So let us do this. And we're going to talk about two different types of ways that we can interact with Holly and potentially set us up to make more than what Holly is making on risk off, sometimes more than what she makes on risk on as well. But in other words, there's even more alpha hiding in the cracks here if we know how to flush it out. So first, let's talk about what I like to call a trade around. In other words, it's a signal that Holly produced that maybe you didn't, maybe you participated in it, maybe you did not. But a good example of a trade around today is DXCM. Okay, so obviously when I double click on DXCM, Holly's going to populate our charts with all of the key metrics here, entry price, stop loss, things of that nature. On the charts, the blue box is representative of the 8361 that we see here, which is our entry. Oops, wrong one. Let's mark that up with a horizontal line here. So Holly says get long right here. Well, it's clear to see what happened when this thing triggered. Just immediately went against us, right? Now here's the stop loss down here. It's always going to be in the red box. And the interesting thing about this is, guess what? Why do we have stop losses? Well, because if we're wrong, that tells us when to get out, right? And everybody's a little bit different, but when we're using stop losses in the strategies that Holly creates, we can see can't stop it, constructed around a 45-minute hold time, and we're using the smart stop, which in this case was 82.89. So one thing that stands out about this trade is Holly took a loss on it. Now, she didn't get stopped out, So why did she get out of the trade? Well, we look at the exit reason here, reduce risk. What does that mean? Well, quick story. We first brought Holly online. She would get out if her profit target got hit or her stop loss got hit or her timed hold had expired. That left a little hole, and it was this. Holly's up a quarter. None of the parameters have been hit. No stop loss, no profit target, no timed hold. Quarter erodes before the timed hold is up. She's losing a quarter. So we quickly fixed that. We're like, we can't have our AI letting winners turn into losers. That's not good. So we came up with reduce risk and profit save. So now we have 5 different reasons why Holly can get out of the trade. See, here's the takeaway though. Holly's strong suit is not her ability to exit a trade. It's delivering to us and you guys statistically weighted entries. That's Holly's strong suit. So if we're trying to play the game with Holly and we see Holly getting out for 54 cents and the stop loss never being triggered, we can go with her if that's what we want to do, or we can stay in the trade because the stop hadn't been hit. If you took that approach, boy, it came close, about as close as they come, but then eventually it made its way back up and you would have been profitable in the trade. Now, here's a good habit to get into, everybody that's watching Holly, and for those of you who are not, when you decide to subscribe, you can use this information as well. But let's say we're doing something, we see Holly initiates a trade and she's immediately red. Well, what we can do for that is we can create what we call a trade around by using a price alert or drawing a line. I'd recommend using a price alert. So once she's below the entry signal in the red, all we have to do is set a price alert for that same level. So we can just come up here and create the price alert so that we're alerted to it when it happens again. But you can see, let's say we weren't in the trade. Sleepy time comes back up here. Hey, second occurrence. Boom, after that, straight off to the races. So whether we stayed in the trade without a stop out or whether we conducted a trade around, said, okay, as soon as it gets back through that line, let me know about it. I'll make the decision, which in this case would have worked out favorably. Or maybe we do both. Maybe we're in 100 here, we never got a stop out, and we're gonna re-up our position once we get over here. So, lots of different ways to work with Holly, even when she's in a losing trade, because a lot of the time, we'll hug this line. This one was significantly outside of it, but there's plenty of times where the trade occurs and it'll hug this line for a little bit. It may pass through it 1, 2, 3, 4 times. Sometimes they go immediately. But when you see Holly in the red, set a price alert. When the stock goes back through it, assess the trade and figure out if you'd like to participate. And of course, we can consult the daily when we're trying to grapple with, well, once we were down here and we're consulting the daily here, and we can see the corresponding wick kind of matching up with some of the lines that I've drawn here, that can give us a little confidence sometimes, whether it's a Holly play or whether we're trying to bottom tick a stock on the intraday. Always look to the left on the daily to try to figure out what might be some intermediate resistance and support.
Always look to the left.
Look to the left, LTL.
Just like you're crossing the street in the U.S.
Yes, and you know what? I look to the left. I look to the right. I look to the left, and I look back to the right again.
If you go to London and you cross the street looking left, you better be lucky.
Yes, because I do live in a small California town where there's a lot of walking going on, and believe you me, I've almost been run over plenty of times. So in any case, that's a good example of a trade around, taking advantage of what. Well, we can't call it Holly's pain, we can, but this is just a reminder of what we used to do in the trading office, Steve, when we saw the guy over there pulling his hair out going, oh, this trade's beating me to death, it's eating my lunch, and we take the other side of it. It's the same thing because Holly is that trader, except she's much smarter and she's playing statistical probability.
I found it interesting that there was no trades made like the last 3 hours of the day. And when you go to risk off, you can notice that histogram that for whatever reason, I don't know what the reason was. Maybe it was the incredible rebound that the market set up after a very weak morning. But that flat line basically just says, "Jeez, midday on, there were no
Hmm.
new trades taken.
I don't see
Therefore,
any statistical
no,
advantage.
no,
Mhm.
I don't see any statistical advantage. So there in itself is another cue from the smart tool that we call Holly. It's not only is it trade direction, but trade selection. So for the most part, what was working this morning was working, but all of a sudden, there was no more statistical probabilities that were popping up. And so Holly just kind of went to sleep. And the remainder of that histogram just shows you what was working for the remainder of the day that was triggered this morning. So I call that out just again, pay attention to the direction. If you see 5 or 6 short sells come out within a period of 10 minutes, get ready for the market to possibly get a little bit weak, because a lot of times those directional biases on Holly's trade selections will transfer into a general bigger move in the same direction. And then trade frequency, is the AI extremely active, or is it, 5 hours into the day and the AI has only made 3 trades? Well, that should be telling you maybe sit on your hands a little bit, because if this statistical machine here isn't seeing any probabilities, it's not going to be firing anything off out of boredom. It's only going to do it if there's a reason.
Right, and she's going to be, once you learn how to read her, she's the person saying, go, 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 buy everything, even buy your initials, because the tide is rising, everything's rising with the tide today. But guess what? Looking at this risk on chart, was that the case today? I mean, look how manic the fluxes were. I mean, that should be telling you something. Risk off, a lot calmer. And see, knowing when to be aggressive is another little caveat here, that we can start to glean information by simply looking at the P&L chart that is Holly, because you can play this just like a stock. Of course, we can't zoom in on this, and hopefully in the future, some modifications we will be able to. But if I was able to draw a straight line across there, Holly tops out, takes a little breather, kind of hugs the line here, and then bam, she breaks out. So if her P&L is breaking out, what should that tell me, you, and everybody using Holly? Is that her little portfolio is breaking out, therefore be a little bit more aggressive on taking the symbols. Okay, so we talked about a trade around, which is trying to capitalize on something that's moving against Holly by simply setting another price alert for the signal price.
Mm-hmm.
But now let's talk about risk on. And let's see, what's going to be the best example of risk on today? Now, there was a little bit of meat left on the bone on AON, which, by the way, from a chart standpoint, what a pretty little entry right here. We all know that bottom picking is very sexy when you're looking at it from a historical standpoint. But being in the moment, trying to pick a bottom, I mean, everybody falls for it at some point in their trading career. Some people, and this is a very small percentage of the populace that's trading, are very proficient at this, but it's never as simple as it looks. If you're going to play that game, otherwise known as knife catching, then you better be prepared to make multiple entries, because you're never going to peg it at the bottom most of the time. Am I right, Steve?
Never. You're never going to get that perfect entry nor the perfect exit. All you can do is hope to get a piece of the middle, a bite out of the middle, a meat out of the middle.
And so when we look at this little bottom play right here, well, what is the strategy looking for here? And so this can't stop its strategy. It trades here and there, but basically what it's doing is it's getting long when everybody else is getting stopped out. That's what the strategy is based around. Sometimes it works, sometimes it doesn't, but obviously if the statistical edge is there and it shows up, then you might want to pay some merit to it. And of course, once again, when we're down here and we need a little bit of, hey, Holly's telling us that anything coming out of that strategy's got a 63.3% chance of working. But hey, a little bit more assurance is always nice, I guess. So if we're looking at the daily, we're right here and we're seeing it kind of hug that line, match up to this wick, what we're seeing right here, that can give us additional confidence. Okay, I'll take 100 or 200 with Holly. Once we see this bottoming wick put in and a rise back above here, we can sit with what we have, or maybe tack on a few more shares to that position using that wick as our exit.
Yep.
So even though there was a little bit of meat on that bone, this one stands out from just so many different points as far as accepting more risk, because we can see here Holly made a walloping 4 pennies. Now, she did stay in this one for the whole time. The strategy was wake up call. So when we take a look at wake up call, it's designed around a 45-minute hold time. So here's the beautiful little entry that Holly called on this stock. Shrink this chart up a little bit. All right, not a lot of pre and post activity, but this is the opening bar right here, just for clarification. Opening 5-minute bar. Now, Steve, I know you know the answer to this one, but what I really like about this entry is that it's past the opening range break, which is a pattern that I personally love. But here we have the entry at 655, and then boom, takes up here, sits on a little shelf for a while in the money. And let's see, 45 minutes from the entry time. So here we go at 7:35. Be 8:15, 8:10. So Holly gets out somewhere in this area right here. Now, from a human perspective, we buy it, we're immediately in the money, and we're getting more sideways action. Now, we can see Holly's going, okay, things are getting, well, no, it's actually the time stop. She's programmed to exit on a 45-minute hold time, so she gets out. She follows her programming, takes her 4 cents. But from a human perspective, nothing really stands out on the daily. You know, at the high of the day, we're butting up against these levels here.
Not until 7, yeah.
Yeah, but range break right here, and then some sideways action. If anything,
that should be a continuation pattern. If anything, we should assume that to be a continuation pattern.
And so range breaks are nice because you can throw a bunch of hocus pocus indicators, Fibonacci's, Ikimoku Cloud, or what do we rename it, Steve? Itchy Scratchy Moku Cloud. Yeah. So we could put all these moving averages, Bollinger Bands, Gans fans, whatever you want, RSIs, slow K, slow D, pick and choose. If we laid all those studies across this setup, you'd notice a lot of correlations, but that's all they would be. We get a nice movement here, we get a little flat line area. What is this telling us? Buyers and sellers are equal. We identified the buyer here on the same type of pattern. Holly calls it. Now we got more sideways action here. This pattern repeats itself again. There's the second break. If anything, now would have been the time to double up on that position, because that is also one of the hard things for new traders to figure out. When do I add to my winners? Most people, when they're new to the game, they're taking their profits too early and they're letting their losers go way too far, right? And then they're not adding to their winning positions. So when you see simple patterns like this, you can call a micro consolidation. It takes many names. It's also called an NR7. But once you start to identify these patterns, it becomes even better. And what I mean by that is we know we had statistical probability behind us. But then if it happens to coincide with the pattern that we like, even better. A stock can work out, a trade can work out on any one of those merits on its own. But when you're able to start stacking them, that really lets you know that not only do I have statistical probability on the pattern that I like, even better. And of course, this nice little pattern right here is what we call fractal. It can unfold on any time frame. So you don't have to necessarily watch a 5-minute, it could be 10-minute, 15-minute, and it can even happen on the daily as well, which we talk about at length in other aspects of the webinar. All right, so just a good example of going, you know what, there's no reason to get out, I'm going to stay in, and we could have plugged a lot more out of this trade than 4 cents, to the tune of about, not quite 10 times, but 8, 9 times more than what Holly made. And there's a good way to break the ice here. Instead of having to pick one way or the other, you simply go, okay, I see Holly getting out, I'm going to peel out of half my position, I'm going to manage my second half accordingly to try to make more money. Now, if you do that, it's always a good idea to set your break even or your stop loss at break even on the second lot, so you end up keeping what you made on the first lot and not giving it back on the second lot. But in this case, it never happened, and could have plugged a lot more than 34 cents out, or a lot more than 4 cents out of that little guy. Now, I've also included this column today because it also gives us another peek into what, how much potential was out there. And max profit is operating under risk off parameters. So Holly took 43 cents here, and the most that position was up during that period was 47 cents. So if you're ever curious, well, how much was this thing up? You go look at the charts, or you can just eyeball this column right here. On this one, she pegged it pretty much about perfectly. Risk off, 55 cents. That was the most it was ever up. So she, just like a human trader, sometimes they're going to peg them at the bottom, sometimes they're going to cover them at the bottom, sometimes they're not. But in this case, her entry is way up here. And then we had a nice little peel off on that stock.
I have a good question, and it's a common question. It comes up a lot and deserves, a good answer before we move on to the last segment. And that is there any sort of players program that tells us exactly what every strategy is attempting to try and do? It's a tough one. Dan Merkin, the CEO, really wants people to focus more on the statistical probabilities of the actual chart, because his thinking is, if a trade comes out and then you look over at the program and you see, okay, this is a trade that looks to buy contrarian bounces on a down day, you might start to override that with your own brain and say, nah, you know what, I don't think I buy that. And that's, it's a good point he makes, but it's also a good point that people make, that they would like to know what some of these strategies are. And there's some certain things that we can deduce from some of the names. Wake up call is always going to be early in the morning. Buying on support is, kind of self-explanatory. Quarterback is actually a pullback buy from a 25% pullback on highs. Power hour short, power hour long, with power hours the final hour of the day. So those are going to be the trades that are only going to go off in the final hour of the day. So the long and the short of it is, we don't necessarily have a complete list of all the players and their numbers and what exactly the strategy is attempting to do. But if you're astute and you click on it and you see that it's a short strategy and you look at the charts, you should be able to kind of see what's going on. Is it buying a breakout momentum to the downside, or is it fading a high from yesterday, like the topping formation, or knocking on resistance? Those are two short strategies I just mentioned, but basically they're kind of waiting for the price to come to them rather than shorting a new low or things like that. So I don't have the perfect answer for you, Bill. If Dan wants to elaborate more in the future, that's his call, but I know where he's coming from. He's trying to keep people from second guessing the statistical score that really we're trying to focus on that comes out of this particular alert. And that's the best answer I can give.
Very, very true. And I am pretty much on the same page, but of course humans like to know what's going on underneath the hood, right? The statistical probability takes precedence over everything. So theoretically, moving forward, we could just change everything to long number one, long number two, long number three, short number one, short number two. So because all that really matters is the statistical probability. Are we going to do that? No. Are we going to make the underpinnings of the strategies and the descriptions available to our clients? Yes, because that's what people want. And that's currently in development. There's no ETA on it, hopefully sooner than later. But yes, in future enhancements, not only are we coming out with some really cool enhancements to Holly as far as the information and the way that she delivers it, but you will be able to click on a strategy in the future, get a description of it, maybe get some of the underpinning filters and alerts that make it up, because everybody needs to keep in mind, if, for example, topping formation, can't stop it, any of these strategies in here, if they show up tomorrow, the name is the same, but the strategy is not. It's been modified in some capacity. Filters have been added, removed by Holly, right? So the name is the same, but the underpinnings change every day because that's how dynamic the system is. Alrighty, so quick check. Yeah, time is flying because we're having so much fun. So let's get into this other topic here. And that is, I'm going to talk about this little window called pack leaders, which is alarmingly simple and would have shown you guys some very interesting things. The habit that I've gotten into with this little window, it's a top list, pack leaders is I don't really pay any attention to it till 30 minutes into the session. So what I've done here is I'm showing you, of course, this is specific time. This is what the list looked like 30 minutes into the market between 7:04, 59 seconds Pacific Standard Time. So this is my watch list. Okay, basically it's just saying, hey, you might want to keep an eye on these guys. Now, once again, circling back to that question, what is pack leaders looking at? Very, very simple. We go into configure, we take a peek here. Once again, I'm not using average daily volume. I'm just saying market cap of the company has to be minimum of $4 billion. Kind of, keeps the trash from coming through, the real thin things. I've got the earnings filters in place, not because I care about earnings in that regard, but I'm weeding out the ETFs and iShares, and they don't have earnings, so it by de facto weeds them out. And then this little guy right here is the linchpin. Position not in 52-week range, position in lifetime range has to be right at 100 or greater. Now, this is what the window's like. Hey, Jamie, psst, keep an eye on these stocks right here. So then we've got a nice little list. 1, 2, 3, 4, 5, 6, 7, 8, 9. Doesn't take very long to start scanning through charts. So when we pulled up Tesla at that time, we're seeing is it right as it's popping above its lifetime range, because not only is this the 52-week high for Tesla, it's the all-time high for Tesla, right? So Steve, you and I talk about these types of setups. For a long time there, it was the trend change lubricants, right? But now we're starting to see stocks at all-time highs. They'll take the dip. They'll start to consolidate. In the case of Tesla, it was a gap, right? But it hovered around this little area for a while, as we can see from the intraday, coming down, plenty of time, coming back up here. Now, if we already knew to keep an eye on Tesla, and then later on in the day, I start seeing it come through my big cap accelerated buying window, which is the turbo breaks up 5.4. So just to save a little bit of time here, we can look at all the times that Tesla, as it was popping these new highs here. Now we're already told to watch Tesla by our pack leaders list. Keep an eye on Tesla. Then I start seeing it come through as it's popping these highs right here. And more importantly, as it's coming up here and taking this little, I like this little red bar here, because for those of you who use the premium, we've got a little system called red bar ignored, green bar ignored, which is, this is the classic example. We have a green bar, we have a red bar, followed up by a green bar, telling us to ignore the red bar. Now, whether you liked it as it was popping its head above its range that it had set up at the top of this wick here, or whether you liked it up here after the red bar ignored, doesn't really matter. You missed out on a little bit here, but whether you participated here or here, look what happened after. And all from just watching, hey, it just popped above its all-time high, and then, psst, hey, by the way, it's hitting a high, and it's doing massive, massive 1-minute volume that we can get a read on right here. Every time it's popping a high, this little 1-minute column is feeding us this information and going, hey, not only is the 3 times 1-minute volume met, but it's 9 times, 10 times, 11 times. And although volume is not the holy grail, when we have a pattern like this and we have massive volume behind it, well, that tends to mean something. All right, so now keep in mind, it doesn't take long to scan through 6 stocks and set up your price alerts. Some are going to be more conducive than others, but ladies and gentlemen, Panera Bread. Told about Panera all during here. This little guy at 7 o'clock, right here. We're like, okay, we're going to watch Panera. Well, if we continue to watch it, look what happens. Nice, tight little consolidation. Well, when we're talking about risk versus reward, and you see these little consolidations, even if you include this guy with this wick, depending on the type of trader you are, some people eliminate wicks, some people abide by them. It's really just up to you. But if this is the little consolidation area, And we saw it way back here at 7, and as we move through close to the 8 o'clock Pacific time, you know, how hard would it be to go, okay, if it breaks this line, I'm in. And if it breaks this line, if I'm in and it breaks this line, I'm out. I mean, that's a pretty small risk. It's a beautiful little consolidation. We know it's already in play because, you know, Panera Bread's been on a huge rip here lately. And then guess what? Guess what comes through the 5.4? Turbo breaks up. As soon as, it was coming through in these levels right here as it taps these little highs, and then it came through right here. Now, depending on how handy and fast you are on the keyboard, the closer you get it from that break point, the better. But my goodness, look at the move that we had here. And I know that some people are out there probably thinking, well, the stock, I just don't trade these high price stocks. Well, that's kind of talk about painting yourself into a corner, because all that matters is price action, right? You can trade a $200, $300 stock, just allocate a certain dollar amount to it. If you've got 70 or let's just say 100,000 of available buying power throughout the day, then you go in with a preset plan. Okay, I'm going to allocate $5,000 per position, 10,000, depending on how many trades you feel like taking for the day. But the movers are the movers, and price, unless they're really getting up there, 500, $1,000 a share, you really shouldn't bat an eyelash when a big mover comes across like that, because just get into $5,000, $10,000 worth, you can still capture that alpha. And from this release point right here, if we just take a 20-point move, 22, 23-point move on this signal, soup of the day between Panera and Tesla, especially in the market that we had today, some of the best alpha out there.
So,
and once again, it's very simple.
Yeah. So before we turn it over to Scott, of course, you've got a couple people who would like a copy of not only the turbo brakes, but your other one there, your pack leaders. If you can maybe quickly, where are you going to drop those? Into the chat window?
That would be the place.
Okay, so guys, on the GoToWebinar toolbar, just find that little chat window and click on the little triangle to open the window. And Jamie's basically going to drop in the cloud links for you. And once you've got the cloud links in there, all you got to do is basically just right-click, save link address, or copy link to your clipboard, and then you can load it directly from your cloud once it's in your clipboard. So he's going to drop those in there right now. And
I'll go ahead and if Scott's waiting in the wings, we're ready for you, Scott. And while Scott tells everybody about the great discount codes and all the things that we have coming up, I will continue to drop these additional windows in the chat area. And I see, Steve, you've already dropped the educational video as well. So Scott, if you're there.
Yep. Yeah, it sounds good.
We're ready for you.
Well, there should be a slide, I think it's number 6, about the test drive. So we can let people go to.
Let me get that up for you.
Yes. So we have an event coming up where you can try Trade Ideas Premium, whether you are only a standard subscriber or not a subscriber at all. So if you're thinking about becoming a Trade Ideas subscriber or thinking about upgrading from standard to premium, April is your month. Go ahead and get in on the test drive. You get 5 full trading days and 2 weekends because there is a holiday in the middle of it. Starting April 10th, on that Monday, if you sign up, you get, well, actually, it starts the Friday before April 10th after, so that's what, the 7th? Is that Friday, April 7th after market? If you are already signed up, you'll get preliminary access to it, but officially the event starts on the 10th. But so go to trade-ideas.com/test drive and sign up. Starting April 10th, or actually a preview that Friday beforehand, you'll be able to get ready and enjoy 5 full days of Trade Ideas Premium. So that's the Monday the 10th through Thursday the 13th, and Friday is a holiday. So then we resume on Monday the 17th for the 5th day. But you can actually sign up through Wednesday the 12th and still get 5 full days. But we recommend getting in on the beginning of it to get that bonus weekend on the evening of the 7th, the full Saturday and Sunday, the 8th and the 9th, to familiarize yourself with the tools. Then come in on the 10th. We're also going to have a contest for you. You'll be getting those rules emailed to you after you register. If you register for the open house, the trade test drive, it does cost $8.88. That covers your exchange fees and all the extra overhead we take with the extra training sessions, extra webinars, and extra attention that we're giving everyone during it. We had one of these in February. We'll have another one late summer after July 4th, but this is the one for the spring. So get in on the test drive. It's going to be fun. We had a great time the last one, and looking forward to this one too. We do have a podcast that's been up for a couple months. We just had a guest on Friday, so you need to download it and figure out who that was. From CNA Finance, we had a great guest. So Trade Ideas Podcast, just search for that in your favorite Trade Ideas app. I mean, your favorite podcast app. We're in iTunes, we're in Stitcher, we're in Overcast, and a bunch of other ones. So do check that out. It's really good. A lot of times it's Dan and Jamie. We've had quite a few interesting sessions with them. We've also had some good ones with Steve, and a few guest spots too with David Afariat, Brad Williams, and others. So check it out, download the newest app, and then keep tuned for a new app on Friday. So if you're a subscriber, you'll get those automatically if you subscribe to the podcast in one of your podcast apps. So we do have a sale code for you that's still good at the beginning of April. Go ahead and use this. If you want to go ahead and start your subscription now, use Pro Holly, all caps, just like you see it, and that saves you 15% off your first month or year of Trade Ideas. It also includes your training. So if you either subscribe to standard or premium, check out the tools, watch some of the videos, go to the trading room, and when you have some questions, sign up for the training. It's included. It's a full hour of one-on-one training, and we've made it pretty easy for you to sign up. So just go to support, click on training, and then follow the tool prompts to get your calendar scheduled. If you have a question, email info@trade-ideas.com, or you can shoot Jamie or Steve a question directly to their emails on the screen there. You can also download some of this information by going to the handouts panel on your GoToWebinar interface and expanding where it says handouts, clicking on that download link, and downloading these cards. You can follow Steve Gomez at Today Trader, or Jamie Hodge at QuantBot, and Dan Merkin at Trade Ideas 1 on Twitter. We also have at Trade Ideas and a handful of others. Like us on Facebook, facebook.com/TradeIdeasPros, how to find it there, and follow us there so you can share us with your friends when we post interesting stuff. Thanks, Jamie and Steve. Y'all have a good afternoon, and see you in the Trade of the Week webinar tomorrow.
See you tomorrow.
Good luck, everybody, moving forward. Thanks for attending, and we'll see you on the flip side.
Yep, bye.